and welcome back to Dukascopy TV. With the winds of the global economy changing every day, Laurent Chevallier of Eurofin Capital is in the studio with me now to discuss alternative investment routes. Laurent, thank you very much for coming in.
Thanks for having me.
Now, what challenges do you think face the alternative investment industry over the next 3 years?
I'll talk about hedge funds because that's the area I know best. I would say one of the main challenges that investors face in the next 3 years would be to seduce back investors to the asset class. As you know, unfortunately, for the last 3 years, it's been difficult to generate exciting performance for investors, and they've been looking at our fees and everything, and so that's one of the challenges. Doing this in the face of hostile politicians, increasing regulations, and central bankers driving the markets in a sort of a managed economy, managed markets has been difficult. So hopefully that's a challenge that hedge funds now can take on and win.
Now, naturally, as troubles continue across the Eurozone and the US, we are seeing investors opt for alternative routes of investment as they look to negate high-risk investment. What opportunities are we seeing in 2013?
I would say that, with the decrease of the systemic risk that we've seen, engineered by the central bankers, by the way, we need to focus on the global scale, on the macro picture, and I think it's becoming clearer and clearer what's happening. And so obviously investors with the ability to project themselves on the macro scale, using hedge funds or alternative vehicles that can project and invest on a global scale. Emerging markets, FX, currencies, etc., would obviously profit from those opportunities.
Now, with the shift in investor sentiment also comes a re-evaluation of regulation. While naturally regulation is the best way to protect investors, as it were, some investors have also criticised forthcoming regulation, claiming that it'll add to costs, reduce the number of startups, etc. What's your stance on this?
I think regulation is needed. However, it can be counterproductive, and I agree with the criticism in terms of, adding cost and reducing the number of startups, in the sense that hedge funds are started by entrepreneurs, and if you increase the cost and if you increase all the regulation hurdles, it's going to be harder to have a company running in the front of those regulations. But however, I really think that regulations overall are good because it forces the industry to be more transparent, more liquid, and more accessible to investors.
Laurent, with all of the themes that we've discussed then in this interview, how does all of this feed into your portfolio management strategy?
Well, we run regulated, liquid, transparent vehicles, so obviously we have not anticipated, but we could see this coming, obviously. And so our portfolios are running on a global scale. And we're here to profit from global events, and we're watching very carefully the politicians and the central bankers to sort of anticipate their next moves, trying to profit from that for our clients.
Laurent, thank you very much for coming to the studio. We appreciate your comments.
Thank you so much.
Stay tuned to Dukascopy TV for Hollenbeck Unleashed. For now though, goodbye.